Good evening, everyone. Um, Welcome to the Center for the Women of New York Financial Literacy Series, workshop number 4. Thank you all so much for attending. We will do tax trauma terminated today, changes and more changes. And I'll let Carroll explain to you like all the changes that have been happening this year. My name is Cecilia Venusta Weigel. For those of you who don't know me, I'm Vice President and Program Committee Chair of CWNY. And our guest speaker tonight is Kathleen Carroll, EA, also Treasurer of CWNY. The Center for the Women of New York advocates for women's rights and full equality for women. Since 1987, CWNY has been empowering women to reach their full potential by offering services that provide the skills, information, and support they need to address economic, emotional, and legal challenges. Given the vast women's needs due to the pandemic, in 2021, CWNY's focus is women's health and well-being, both physical and mental health, and also women's financial independence. CWNY offers educational programs and support services and classes. On our educational outreach, we have panel discussions and webinars on domestic violence, trafficking awareness, health and wellness, and financial literacy and independence, such as this webinar. Some of the services we have are a caregiver support group. Our caregiver support group is for those of us who take care of our elderly family members and friends. We have a women in crisis support group, English as a second language classes, a legal team that will respond to your inquiries via email. We have fitness classes, Zumba and cardio resistance class fitness. And we also offer referrals. So if you don't know if we offer a service, reach out anyway. We'll guide you in the right direction to our partners. Some of our upcoming events are a health fair in May, a career conference in June. We will try to do a women's art exhibit in the summer. We'll have a sustainable gardening class and activities soon. We're not sure when, but we think probably starting in May. A book club in women's issues, as well as a film club. We'll have a couple of film screenings in our location in Fort Totten. If you would like to download this presentation, it will be available in a couple of days in our website, cwny.org/past-events. Now, we would love to know where you're coming from, but not only because we would like to know where you're coming from, what neighborhood you're in, but that helps us with funding. So if you could please fill out a survey that has 2 questions. Our dear Lana will put that in the chat, the link in the chat. If you dialed in, you can also email your zip code to events@cwny.org, and someone will be monitoring that that email address for also for questions that you may have if you're dialing in. Your questions will be addressed after the presentation by Kathy Carroll. You can, if you are in the webinar on Zoom, you can use the chat box at the bottom of your Zoom screen, and we will definitely address your questions. Now a little bit about Kathy Carroll. Kathy is a professional accountant, enrolled agent to practice before the Internal Revenue Service. She has been practicing accounting and providing bookkeeping services since 1981 to the present. She works with individual and corporate clients. She directed and ran the Student Association Income Tax Preparation program at Queens College for 26 years. She also ran an annual seminar at the International Students and Scholars Office at Queens College from 2008 until 2017. This program is provided free on-campus tax prep and advice to students. She received her BS in accounting from the CW Post Center of Long Island University and attended a graduate program at New York University. Kathy also volunteers at the Center for the Women of New York. We're so lucky to have her. She's our current treasurer and former vice president of finance. She provides job and vocational training, presents our financial literacy programs, and is the CWNY Work Readiness Program advisor. If you'd like to contact Kathy, here's her contact information. She's in Whitestone. Her phone number is 718-767-2299. Thank you so much, Kathy, for being here. You can now take it away.
Thanks, Cecilia. Thank you very much. And it's my pleasure to be here. This evening, we will be presenting Tax Trauma Terminated, Part 4. This is entitled Changes and More Changes. At the end of our last program, I really thought that we were only going to have 3 parts to this series, but so much has been going on, we really needed to have this 4th installment of the series. Highlights of the tax law changes for 2020 returns. Yes, you are reading that correctly. The Internal Revenue Service has announced that changes that will affect 2020 tax returns that are currently being filed. This unprecedented action has caused this year's tax filing season to be extended to May 17th from the usual April 15th filing deadline. So as of today, we have almost another month to still do income taxes. This extension applies to personal income taxes only, corporation taxes and other types of business taxes, and even estimated taxes all remained at their original filing dates, which were April 15th for the first quarter of 2021 for the estimated taxes. So hopefully everyone that fell into the category of needing to file that return has already done it. There's good news about unemployment benefits among these many changes. One of the most significant changes is that the first $10,200 of unemployment benefits has been declared tax-free. This means that if a taxpayer received only $10,200 in unemployment benefits during 2020, all of that amount will be tax-free. If someone received more than that amount in benefits, the balance over $10,200 will be considered taxable income. This is a very big change and very significant from the start of the tax season, when 100% of unemployment was fully taxable, as it has always been in years past. But due to the many additional people that were receiving unemployment this year and the very large amounts of unemployment that were paid, the IRS mid-tax season has reconsidered the taxability of some of these benefits. Now, New York State always has to do something different. As we discussed in part 3 of our tax series, New York State is not obligated to follow the federal tax code, and in many cases, they do not. In this case, New York State has joined 13 other states in continuing to treat 100% of unemployment benefits as fully taxable. Because of this decision, we as New York residents will only receive a tax break from the IRS, not from New York State. And I have to say that New York State didn't even decide this on the same day as the IRS made the announcement. So for about almost 2 weeks, there was no decision on whether New York State was going to tax the full unemployment or go along with this partial break of the $10,200. So for a couple of weeks, many tax returns were left in limbo while we were awaiting a decision from the state. Now, because of these changes, many returns had already been filed. So there's an issue of handling returns that already have been filed. So in mid-March, the IRS announced this was good news regarding the tax treatment of unemployment benefits. But usually mid-March is very far into the tax filing season. There would only be like one more month to do taxes normally. So what happens to all the taxpayers who filed early, either on their own with free tax filing programs or with their accountants? You know, many people want to have their taxes done early. They don't want to wait around and be stressed about when are the taxes getting done and things like that. But this year, it seems like the people that are filing later really kind of made the right decision. So typically, any changes to a filed return can only be done through an additional filing of an amended return called Form 1040X. Now, this form is a fairly complicated form, and throughout this series, I've been trying to help people understand how to possibly file their own tax returns through the free filing programs and some basic information. But a 1040X is probably beyond the scope of what most people would be able to do on their own. And this form cannot be e-filed either. So the filing of this form could be costly in terms of both time and money. A solution. While at first not offering any solution to the dilemma of taxpayers who filed early and paid taxes unnecessarily, the IRS has recently announced that no amended returns will need to be filed and that they will be handling all calculations for refunds internally at the IRS offices. There are indications that these refund checks will be issued beginning in May, but I have not seen anything definitive written down about that. And considering how the IRS has been operating for the past few years, I wouldn't count on that. The amount of the refund will be based on the original return, including filing status, deductions, tax credits, etc. So the calculations could be quite complex. But once the IRS does all these calculations, they will be sending taxpayers refunds based on the $10,200 of unemployment that will be tax-free. Okay, the recovery rebate credit. This is another important new credit for 2020. This fancy title actually refers to the stimulus checks that were issued by the US Treasury in mid-2020, April through August, and December 2020 through February 2021. This credit does not have anything to do with the $1,400 stimulus checks that have been recently sent to the public. It is likely that the current stimulus and any possible future payments will be addressed on the 2021 tax returns. So for right now, this recovery rebate credit refers only to the payments that were issued in 2020. And I'm seeing that many people did not receive some of these stimulus at all, and some of them did not receive the correct amount. So this is really becoming an important credit for taxpayers so that they can catch up and get all the money they were entitled to during the 2020 tax year. Any and all stimulus checks received in 2020 are non-taxable. So this is basically tax-free money from the government. It does not have to be reported anywhere, and it is not subject to income tax. The purpose of the recovery rebate credit is for taxpayers who did not receive one or more of the payments in 2020 so that they can apply for it on the 2020 tax return. Theoretically, through the use of this credit, all persons who are entitled to a stimulus check from last year will be able to receive it by an increase in their tax refund or a reduction in the amount of tax that may be owed. So it's not broken out separately. It's included as part of your entire tax picture, whether you're going to be getting a refund or if you have to pay. So you will get it, but it's not going to be issued as anything separate. The stimulus amounts sent out in 2020 varied in the first and second rounds. The first stimulus, which was mid-2020, was based on the 2018 tax returns, or 2019 if it had been filed. The 2019 tax season had also been extended, but it was extended much longer than even May. It was extended to July 15th of 2020. So at the time the stimuluses were issued in the spring, Many persons had not even filed their 2019 return. The first stimulus was supposed to be $1,200 for each adult taxpayer, with an additional $500 payment for each dependent under the age of 17. The second stimulus, which was December 2020 to February of this year, was issued at a flat $600 per person, including dependents of any age included on the return. Now, the $1,400 that's still in the process of being issued also is $1,400 per person. So the first set of stimulus last year was significantly different in the way it was calculated than the next two. In order to maximize the benefit of the recovery rebate credit, all taxpayers should check their bank statements carefully before beginning their tax returns. As 2020 was a very stressful year for all, many people may not recall if they received all the stimulus to which they are entitled, or if they received the right amount. It is worth it to take a few extra minutes to verify what you were actually sent. Very interestingly, if for some reason you were sent too much money for your stimulus, the IRS has advised that you do not have to return it. So actually, it seems that on their end, they may have been miscalculating some of these stimulus checks too, in sending some taxpayers too much money. So if you receive too much money, that's fine. You don't have to do anything with it. But in my practice, I've seen taxpayers coming into my office who really didn't know how much they got or when they got it. So I did advise them to look at their bank statements so that we can accurately assess what they are supposed to be getting on their tax return as it's being done now. Non-filers. As we learned in part 1 of our series, there are many people out there who have neglected to file yearly returns, or possibly do not meet the filing requirements in a given year. For example, if their income doesn't exceed the standard deduction, technically they may not have to file. But how do these non-filers receive the stimulus payments to which they are entitled? Most people who are receiving Social Security will receive the stimulus even if they do not file a tax return, because the Treasury Department has their bank information on file already, since Social Security nowadays can only be direct deposited. They won't send you a check. So people that are receiving Social Security can pretty much be guaranteed that they're going to get some type of stimulus check. Taxpayers who filed returns without direct deposit information generally receive the stimulus checks in the mail, but they would be receiving that much later than persons who filed with direct deposit. Although it is not typical for a person with income below the filing requirement to file a return, it would be a good idea to file a return this year in any case, with your banking information included. I know that sounds very weird because people might be filing returns literally with zero income on the return. But on the second page of the 1040, there is a place for you to fill in your routing number and your account number, which seems to be very important in relation to these stimulus checks. So even if you really don't think you need to file a return and your return would just have zero income, it might be a good idea this year to file the return so that the IRS will have the information on file for you. Now, non-filers in New York City can get an extra small amount of money as a credit, and they're entitled to this amount of money whether or not they file a tax return or not. Residents of New York City are entitled to a credit for New York City school taxes. This credit is typically included as part of one's New York State filing. The credit is $63 for a single taxpayer and $125 for those filing a joint return. Those are set amounts, they don't change, and they've been in effect for most of the years that I've been doing taxes. Non-filers can obtain this refund by filing a simple form called NYC 210. And we have that form right here. It's just a very, very basic form. It just asks you information such as your name, your address, your social security number. Are you single, married? Did you file a tax return last year? And even if you didn't, it gives you a space to put in your direct deposit information, and then you can mail the form into New York State, and they will send you either $63 or $125, whether you're filing a return or not. So I've put the link to the New York State tax website where you can get this NYC 210 file. It's worth it to fill it in just to obtain, the small refund that you're entitled to. And it should take less than 15 minutes to fill out. It's very simple. Now, extensions. Every year, taxpayers are allowed to extend the time to file their tax returns. So this is something that's always in effect. But even with the tax season extended to May 17th, many people still will not be ready to file their returns. If this is the case, a further extension of time can be obtained automatically by filing Form 4868 and Form IT-370 for New York State. They're two separate forms. The IRS, if you file a form for the IRS, you won't be extended automatically for the state. You have to file the state form as well. The filing of these forms by May 17, 2021 will allow you time to file your return by October 15th of 2021. It's a 6-month extension, but it's 6 months from April 15th, not from May 17th. So it's a little tricky this year. It's actually from the extended filing date of May 17th, it's actually a 5-month extension. It is important to note that these extensions are only for the filing of the tax forms. They're not for payment of, not extending the payment of any tax that may be due. If you think you are going to owe tax, you must send in a payment with your extension, even if you have to guess at the amount, because even if you get an extension for your return, that will clear you from any late filing penalty. But if you don't send in a check with the extension, you will still be subject to a late payment penalty and interest on that payment. Now, this is what the 4868 looks like, the IRS form, another very simple form. This form does not even have to be signed. So if you're working with an accountant, you can just tell your accountant, fill out the extension, and the accountant can just send it in or e-file it for you, since it does not even require a signature. Now, the IT-370, this New York State form, seems to be a little bit problematic, because I looked at the website just before the webinar started, and it seems that the IT-370, if you can't e-file it through their website, you have to call them up and ask them to send you the form. So this seems to be something new. And again, nothing with New York State is easy. So if you do need an extension of time for New York State, you probably should call them very soon and have them send that form to you. Many of the recent tax law changes are part of the American Rescue Plan authorized by Congress in March 2021. More changes will be coming for the 2021 tax season coming up next year. An important benefit coming soon will be the advanced payment of the 2021 child tax credit at an expected rate of $300 per month. This is not totally finalized yet, so the payments are expected to begin in July 2021 and will be based on the child tax credit that you received in 2020. These payments are designed to help families with children, but can only be received if a 2020 return has been filed. For more information on the child tax credit advance payments, I've included an article from CNBC. Actually, it's an article and a little video, and it explains how this child tax credit is going to work with the advance payments, because it's something that's never been done before, and it's a little bit complex. So it probably would be a good idea to look at this website and to get more information about exactly what's going to be going on with this. But people will be receiving advanced payments of this child tax credit probably in the beginning of the summer. So this should help many families. I have this next slide as a question, end of the 2020 tax season, because who knows? I don't think at this point the tax season is going to be extended beyond May 17th. So everybody should be ready to file their returns by then, or to file the extensions as we just discussed. But as we also noted, last year the tax season went on into the middle of July. So right now it looks like the tax season is only going to have this one extension to May 17th, and then returns will be due. With the tax changes seeming to take place almost on a weekly basis, we felt it was very important to continue our series in order to keep everyone up to date with the most recent information. There's a lot of money being given out, and it seems like there may be even more being given out in the near future or over the next year. So the best way to make sure that you receive all that you are entitled to is file your tax return. Many of these stimuluses, credits, and other things that are going to be out there are dependent on whether you have filed your tax return or not. So it's in everyone's best interest to try to get their tax return filed as soon as possible by May 17th, so that you'll be eligible for any future stimulus or payments that are going to be coming out. Thank you for your participation in our Tax Trauma Terminated series. As we are assuming that the tax season will actually end on May 17th, our next webinar in the CWNY Financial Literacy Program series will discuss basic steps in personal finance rather than focusing on tax returns as we have been since the beginning of this series. Our next webinar will be entitled Female Financial Freedom. Thank you very much.
Thank you, Kathy, very much. As always, like wonderful to have all the information, your wealth of information and tax, and especially this year. It's not something that will be on the books that you can look at. It's like changing so much. Thank you everyone so much for coming. And now it's a Q&A time. Again, you can put your questions in the chat. And if you dialed in, you can email your questions to events@cwny.org. Let me look at the chat to see if there are any questions already there. Well, I guess I will start. I was wondering, like, so I don't do my taxes myself, but like, what is the consequence? Like, if you happen, I know this year has been so crazy for everyone, and people are distracted. And even though, like, we all know that taxes are so important to do, this year is like a blur, right? What happens if you don't file an extension, and then you're like, what's the consequence?
Well, there could be possibly limited consequences, or there could be some negative consequences depending on whether you're getting a refund or if you have to make a payment. So way back in part 1 of the series, we were discussing that if you're entitled to a refund, you actually don't have to file your tax return for 3 years, which is something really that's, people aren't aware of. April 15th is usually in everybody's mind. It's a very important date, and of course it is. But if you think you're getting a refund and you don't file the return for 3 years, that you still will get the refund. But after the 3rd year, and it's 3 years from the due date of the return. So now, May 17th of 2021, now that they've extended it, is the last day you can file for tax returns from 2017, because they would do April 15th of 2018. So it's 3 years from the filing date, because after that 3-year time period, the IRS will keep your refund. They will not give it to you. So that could be a very negative impact on a refund situation. But in the case of someone that owes money, if you don't file the return, or as I was saying in this webinar about filing the extension and making a payment with the extension, you'll be subject to interest and penalties, which is not nice. So pretty much whether you're getting a refund or whether you owe money, it's probably a good idea to try to get the return in on time. And especially this year because of all the different things that are happening. I mean, we never had stimulus payments before or anything like these things that are coming from the government. And many of them are being processed on prior year's tax returns that should have been filed. Some of the people that seem to be having the most trouble getting the stimulus checks are people that have not filed in the past. And that's actually why this whole rebate recovery credit thing was put on this year's return, to try to catch those people and say, hey, now you got to file your return this year if you want these monies.
All right. So file, like, conclusion, file your taxes on time, right?
Yes.
That's the best option. We have a question here in the chat. If I file using an online program, will it take into account that the stimulus money should not be taxed?
Yes. Yes, it will, because you don't have to, when you file an online with an online program, it won't ask you anything about the stimulus money that you got, other than asking you, did you receive it? And if you did not receive it, it will add it to your refund, or it will reduce the amount that you owe. It's 100% non-taxable. So even with an online tax program, those programs ask you questions about your specific income, and the stimulus is not an income item.
Okay. And there was a second part of that question that said, because the online program is Free Tax USA, and will it know to tax only the unemployment amount after 10,200? I guess you responded that already.
No,
So
no, that's actually a different question.
Oh, okay.
Because the other question was about the stimulus, but yes, Free Tax USA is actually a program that I use too. And all these tax programs, I was very surprised, to tell you the truth, because all the programs seem to have been updated within a day or two of the IRS making that official announcement. And it automatically takes off the 10,200. So when you input your amount of unemployment, you put in the full amount, and the program automatically takes the non-taxable amount out. So it was
At least, yeah, at least there's that, right? The unemployment is not taxed this year. It's like a little bit of light in such a crazy year. Right, those are all the questions. So. Yeah. I have a question about the child, the education, the school credit for like the NYC,
right,
through the state. If you did file the taxes, can you still fill out that form?
No, because that form that I was showing is specifically for non-filers, because the $63 and the $125 that I was mentioning, that's automatically on the IT 201. So anyone that's actually filing their tax returns, that credit will automatically appear on the return. So you don't have to file the separate NYC 210. That form is only for people that don't file a New York State tax return.
Thank you, Kathy. And I think the last one, if I know like this may be tricky to respond because it's for next year and nothing is written yet, but those rumors about the $300 per month for children, can anyone get that money, or do you have to make less than a certain amount per year? Is there any restriction to get that benefit?
There are restrictions, but the restrictions are very high. And that's why I was like referring to that CNBC piece, because I actually have to study more in depth the requirements and restrictions that are on this child tax credit, because they've expanded it and changed it significantly from what it is right now. They obviously, for very, very high income taxpayers, those people are not going to be eligible for this type of credit. But it is geared to quite a lot of people, like many more people than you would expect. And they raised the amount of the credit. They're going to be giving in advance. As I say, that you're right, it's like rumors that it's going to be starting in July and it's going to be $300 a month. But then part of what I was researching is that the amount that you get in advance, that's why it's called an advance tax credit. You're not going to get that on your tax return next year. So it's a little tricky because just based on the current setup, which I can't even comment on what is going to happen next year. But if it goes according to the current setup, let's say starting in July, you get $300 a month. Okay, so then you have July, August, September, October, November, December. You have 6 months, you're going to get $1,800. So now I believe it seems like it's going to be the exact opposite of this stimulus thing. It's like that $1,800, you're not going to get that on your 2021 return because you will have gotten it in advance. So I think next year people are going to be disappointed because the child tax credit is one of the things that allows people to get a really large refund on the return itself if they have children and if they meet, the other requirements that are involved. So it could be, it's kind of like good and bad. It's like, of course, everyone would love to get $300 in the mail every month. And of course, it's helpful. But then when they file the 2021 return, they're going to say, oh, wow, I got a lot less than I got last year. And it's like, yeah, because you already have the money. So I think that's going to be an immediate pitfall of this thing. So, but it remains to be seen.
Yeah, it's like actually someone, thank you, Linda, copy an article in the chat, which I will share with everyone else. It's 7 hours old, and it does talk about you may have to pay back some of the new 3,000 child tax credit. So it's all new. So we're very lucky to have you, Kathy, with all this new information that's happening, right now, yesterday. Thank you so much. And if there are not any, let me see if there are any more questions in the chat. I don't see anything. Please feel free to pose another question while I share with you. This is the resources that some of the resources that Kathy has used. And I don't know if Kathy, you want to say something about these sites that we mentioned in every workshop that are very user-friendly. You can go ahead and share some. Like if not, it's like Victoria always shares this slide, but it's all like it's all user-friendly. You can find all this information online. Again, we're so lucky to have Kathy to make it simple and put it for us in in the English language. We thank you, Kathy, and thank everyone that attended the webinar. Please keep coming and share with others that may be interested. If you would like to contact us, you can find us in our in social media and on our website. Our website is cwny.org. We have 2 locations in Queensboro Hall and Fort Totten Park. Everything is on our website and social media. We're on Facebook, Twitter, Instagram, and YouTube channel. Let me see, there are 2 messages here. Oh, all the social media links are in the chat. So please feel free to click here and check out some of the other services that we offer. And last but not least, we would like to invite all of you to our annual gala, which is happening on the 29th, which is next Thursday from 7 to 8 p.m. We honor women in different areas. We're honoring women in health, in the arts, and a lot more men who support women issues. Please come. You can also find that information in our website, cwny.org. And again, this presentation will be on our website, both the video of this webinar and the PowerPoint presentation. With that, good night, everyone, and have a good evening. We hope to see you soon.
Yes, thank you very much. Good evening.
Thank you, Kathy.
You're welcome.